probably obvious, but I guess if we anchor this in market as opposed to what we want market to do, then we have a better chance of actually engaging market on their terms. So again, one thing I think is particularly important for Andrew is understanding philanthropy is about human response. The first and foremost thing to understand about philanthropy in its most rudimentary form is it's about response, and then those mechanisms that we put underneath it enable responses to be made. Now, some of those responses will be transactional and some will be transformational. So I think straight away you're painting a picture of multiple pathways, but you're also then creating the opportunity to create clarity, or creating an opportunity for clarity around those different points of progression and how they relate and how they don't relate. So, for example, here, the idea that engaging people in a lottery is a really good transactional approach that might develop into some level of transformational support, but to see it for what it is, don't make it more, don't make it less. So, for example, making it less means we see it purely as a commercial gaming opportunity, which it's not, but making it more assumes a certain set of behaviours from people that are more likely not to accrue for the mass, maybe for the few, but not for the mass. But that's come to once that relationship has been anchored. So, and I guess just as an aside, and I guess, I'm happy to have this conversation with Dom and Anna and anyone else who cares to listen. I've never, ever seen a pathway to engaging lottery support through anything other than inviting people to buy tickets. Full stop. And even buying other tickets to buy something other tickets, I would argue, just gets in the way, because you're increasing the degree of difficulty in a transactional modality. If we're talking about transaction, we're talking about a very simple line of sight. Sharon, will you do this for me? Nigel, yes, I will. But if I'm saying, can you come and do this, and then that will lead you to this, and then that leads you to that, there is a high risk that not just that I will lose you on the way, but your interest and your engagement into those processes will be diluted as well. So I think there might be even a visual representation if you think about the transformational journey and the transactional journey, to say, look, as we look to bring people in to that response notion of philanthropy, there are different pathways. And so for Endeavour, there is a lottery pathway, which is transactional, and it can lead to transformational opportunities for some over time. But the reality is, that some will be fewer. As there is for fundraising, transactional opportunities such as annual fund and events and the like. And similarly, probably the relationship here in a similar form, we see data around the very significant difficulty in shifting peer-to-peer supporters into regular supporters from a fundraising context. You would argue that potentially is the same from a lottery context. Now, I've just lost sound there. Sorry, you seem to be mute.
There I am again.
Yep, gotcha. Yep.
I didn't click it on properly.
Yep. So what I'm building here is just, and probably worth even assembling these parts as you think about this, because what I'm suggesting, and I think just as there are conversations that are happening sort of at a broader level around where fundraising and lottery sits, I would say jump into that.
Yes.
Don't try to invade it. Be very open in sharing that beyond self, but create those visual and verbal explainers.
Yeah.
So, the critical thing I hear from, say, Anthony, anti-funding, look, I get that's what you want, but just because you want it has no relationship whatsoever to what donors will do. And yes, you're about paying your wage. I think, it's even more than that. donors and philanthropic psychology tells us it. You can quote this quite comfortably. Donors work off the base of autonomy, competence, and connectedness or relatedness. So those three things. And so the idea that I will give you something for you to do with what you want denudes the idea of both autonomy and competence. You know, I'm basically acting in a way that's not autonomous and certainly not competent because I'm not choosing my path. So, you know, and the 20, 30 years ago, there was probably a greater propensity for that to happen. And look, it's probably worthwhile even reflecting, you know, why is Anthony hovering around that theme? I suspect there are a few reasons, but one is it's a simple accounting view of how things happen when we look at the numbers, but we don't look at what lies behind the numbers. And that's a default that many will make. I suggest the other lens that might be present is a situational lens. And working in an organisation like Cancer Council, when there is a higher propensity of untied gifts, because your proposition is markedly different. And here the idea that, okay, so you look at Cancer Council Endeavour Foundation, and it doesn't really take a lot of thinking to look at the stark difference and maybe raise that as a comparative notion and call out the beast here. And you can say, look, I'll use this as an example in market, but you kind of being quite overt. But if I'm saying to you, would you support the Cancer Council, Sharon? You're kind of going, yeah, I get what you do because it impacts me, and I really, whether it's research or patient support, there'll be some people that have a view around what that might be and what they want to support, but I don't need to spend any time explaining what Cancer Council does.
No.
Okay. Yeah. And I'm sure that's exactly the same for Endeavour Foundation. Not. And so I think it's worth calling out those propositions because you're saying we are not all equal in market. So when we think about the market drivers, we've also got to recognise that we are dealing with different elements, both in terms of who we are and how the market sees us. And because the market is the dominant element in all of this, that will influence our position in market significantly, without equivocation. So the idea of getting untied funding, look, to be blunt, it even depends on the program. So I have to say I don't witness that significantly with Leukemia Foundation. Yeah. Even though the proposition around blood cancers is probably only, you know, if anything, slightly less comprehensive than the cancer proposition, same thing really. We get support from, it's interesting actually, we still have this conversation in Chile about tied and untied funding, particularly around large gifts. And there is no doubt that the pathway that we would take in the organisation is to, you know, try and engage people on their terms in the first instance, in the way in which they might see their gift being focused. And, you know, that's often around research, and then bring them into a broader view. Now, we do see a different engagement with something like SHAVE, or what's called a SHAVE. And here, in very recent times, in the last couple of years, we've shifted the proposition from one that is about the SHAVE to being far more focused on blood cancer, and that a bit early to tell yet. It might be coincidental, but certainly the results have lifted. And yes, other things have been done in terms of channel focus and engagement of cohorts and so forth, but SHAVE was on a downward trajectory and has gone back up. But one of the things that I think was missing, at least in my observation, was we weren't talking to people about blood cancers. And again, what I'm getting at here is the overt nature of blood cancer and cancer in the market creates a response. I've forgotten this. It's really top of mind myself. Leon and I were talking just Saturday night, actually, and she mentioned that her grandmother passed away from leukemia. Now I'm thinking, oh, okay, yeah, that's that sort of reach. We're actually, again, just quick tangent, we're at Alan Davies' show on Saturday night, and he mentioned he lost his mother when he was 6 to leukemia, and we're talking about that. So those points of contact shape your disposition to get your attention. And sometimes they are so overt that it's not consequence. But, by contrast, you again, and this is perhaps something to think about how you might even draw out this comparison. When we think about cancers, or even specifically broad-based cancers, we don't have to think too far in our lives around the people we know. But think for a moment about the number of people you know in your life who have intellectual disabilities. And think of that stark difference that's created when that is your experience, Andrew, Elizabeth, versus for those who have no point of reference and what that actually means. So again, we're drawing on this market analogy here. So what else has to happen for people who have no frame of reference around intellectual disability for them to respond? Okay, so here again, I just it's worth spending time. The other thing that I think is, and again, you might then say, look, so our job in a transformational conduit where the transactional piece is not overt, vis-a-vis buy a lottery ticket, respond to this appeal, come to this event. And even here, you can paint a picture of saying there is a dissipation of the way in which people respond based on that transactional offering. So it's more likely for people to respond to buying a lottery ticket because there's something in it for them. But an appeal creates a different construct, and there's less of that reason to give because they don't have that personal connection. An event might be a bit more overt because there are other things that we are doing, vis-a-vis business awards, etc., etc. So I think just this is where it's just useful because I think you can get some aha moments of understanding.
Okay.
The other thing that I would emphasize in all of that is we can't afford to over assume the way in which people's philanthropic disposition exists. So the idea that we get them to buy a house or a home assumes that people already have a philanthropic disposition. It assumes that they are comfortable with significant levels of giving. It assumes we have those people in our cohort, and it assumes that that's what they want to do. And so there's a significant amount of
presumptions,
which continues to diminish the probability of those assumptions matching the desired behaviour that we want. Okay, so here we're getting into a marketing construct that I think stands a chance of helping people understand something that is not always configured in that marketing construct. So once again, we've got to come back to this premise, I think, that a significant challenge for anyone to understand the mechanics of fundraising practice is that they are exposed to it universally. Most people will have some frame of reference and engagement in different activities they're exposed to. And that will often shape their perception, their understanding of what's going on. Oh, I've done fundraising. I did it at the church. I did it at the school. I did it at the sporting club. I've done it at the service club. Therefore, no, you don't need to explain it to me. I get it. Look, I'm sure you do. But let me just help you understand a bit more on what lies behind that, because this is a different dynamic. In that voluntary construct, we can afford to be quite ad hoc, and there's a different sense of outcomes. This isn't that. You don't want to call it out every time, but I'd strongly suggest that it's something that you keep in your mind and look for those opportunities and be ready with your narrative. Say, I understand why you might look at that. However, I just want to very quickly explain that this is how this actually works from a behavioural perspective, and this is what's going on. So what we might reference over here may not be overly instructive in this body of work. Yeah.
Perfect. So with all that, so that's great, and I'm really feeling comfortable with. That's how I then start the conversation. Once I get into it, to introduce it, because then, like, I'm going in to speak about this partnerships thing, which we've already sort of discussed. So
corporate partnerships.
Yeah, the corporate partnerships, the 360 relationship. But I don't want to lead in with that now, like, because I think when I showed you the presentation for that, it pretty much goes straight into it. I pretty much say that we're doing this because of the need. The need was the awards lunch, and that's the opportunity, and blah blah blah. And I roll on. I want to spend the first 10 minutes at least, if not 20 minutes. I've got 45 minutes going into this conversation. How do you suggest I introduce it without sounding like I'm changing the subject on them?
So what I would suggest, and to some extent it's not dissimilar to something I'm doing on Thursday morning. I'm speaking to a Rotary Club about philanthropy and all things around it. And I'm taking an introductory tack here, which is not what I suggest you do in this instance, but to some extent it's about setting a scene. So in this instance, I'll be setting a scene which is based in Ephesus in what is now Turkey, where have you been to Ephesus?
No.
No, it's a ruin. It's an ancient city in what was an old delta. Anyway, quite famous. It's a part of the Eastern Roman Empire, and there's this cobble street, which in itself is quite spectacular. Runs past these terrace houses, and then it runs to an old library, which is still got some ruins, about 3 stories. It's quite there's the whole lot of other features that are really quite significant. But in this street, there are 3 stone tablets, and basically what they say is they call upon the community to leave gifts in their wills to the community of Ephesus rather than leave it to the state. So it's basically direct mail circa 300 AD. And it's a really interesting reminder that fundraising is not new.
No.
And it's also an interesting reminder that philanthropy, philos anthropos, ancient Greek, would understandably be anchored in both a experiential construct and a literal construct in an Eastern Roman Empire city, because the Eastern Roman Empire was fundamentally Greek.
It's Greek,
so
right?
So where I'm going with that in explaining, in sort of setting this scene, is to talk about, what is old is new again. And so here, what I would suggest, I wouldn't take people to Ephesus, but what I would suggest is to someone, in order for us to understand and optimize our engagement around corporate partnerships, it's really important for us to start with understanding philanthropy and recognize that this is what it is and this is how response occurs, because this then talks to why companies respond. So we come back to this trope. You could even perhaps use this. So something we hear, and certainly in philanthropy, certainly corporate partnerships, is, well, they've got plenty of money, they should give us some. So let's completely disavow that straight out of the blocks by being quite clear that this is not what happens in philanthropy, and it's certainly not what happens in corporate partnerships, because no company actually exists to give away money. More about that later. I think then what could be helpful, perhaps, is having established that view. Okay, so philanthropy is about response. It's about how, so fundamentally, even in a corporate partnership context, it is driven by people, not companies. Companies are inanimate. People is where the animation exists. So we need to engage people. thinking about that, we also need to think about it, that broader philanthropy spectrum. What are those drivers, if we think about the things that activate philanthropy, giving time, voice, and money, what are those drivers of effective or successful fundraising? I do argue that it's about knowing your philanthropic constituency, having a compelling vision for change, leadership engagement, organisational buy-in, and a robust fundraising operation. Those 5 points are critical. And so in that, the first thing, and probably the place to hover around this, would be, so in the context of our philanthropic constituency, let's consider that we have different points of connection. We've got individuals, families, people who will make decisions. We've got organisations in community. We've got organised funding organisations like trust and foundations. We have companies in their different constructs. So if we think about that, let's also understand that generally in the market, it's accepted, research tells us around about 10% of fundraising will typically come from that company, that corporate domain. So it's a part of that mix. But then we need to understand what that dynamic is with the people in terms of their response to that compelling vision for change. So here, again, we come back to why companies might respond, and we think about even here, what are we talking about when we're talking about companies? And we're generally talking about either companies that are owned by shareholders, or companies that are owned by a smaller group of owners, private companies, listed companies, private companies, generally what's in your marketplace. So who are those people we're talking to? Well, it'd be management and board on behalf of shareholders. Again, recognising they have a different set of obligations, and in terms of privately held companies, well, it's the owners, and we're having individual conversations.
Yeah, exactly.
So it's bringing it back to how the market is operating. So here then, so in the context of corporate partnerships, what are those reasons that people would engage with us that are everything from their own interests to community interests? And sitting in their own interest, well, there's a business partnership. We have a relationship with them. We would be looking to continue to embed that relationship. Now, that might also fit that community interest perspective, but it's also a reasonable self-interest, which is perfectly fine. Moving through to that could work, but it's more likely that those companies with a consistent relationship will be those partners that are more enduring. Not exclusively, but that's certainly our propensity. But what we're looking to try and do through the business awards and other activities is to engage those companies, that the people in those companies who see a natural and tangible relationship with endeavour. Now, this is certainly something that's aided through ESG, where the current requirement on businesses is to have a focus on environmental, social and governance. So we accept that the E and the G are something that perhaps gets attention. How do we help that companies attend to that social agenda? This is part of our challenge as well. So you're building a reason why people will, and to some extent by omission, you're also then leaving out why they won't. Because we like Endeavour, they're a good cause, or whatever. No, it's not how it works. But you're also emphasising this notion that it's people who make decisions. And it's about serving their interests and motivations, not yours. But you're also showing where companies or corporate partnerships, if you will, fit in that landscape of supporters. You're showing that it's part of that landscape. You're creating a reference to what quantum it occupies, which I think continues to be an important piece of narrative to reinforce, because it says, okay, look, it's understandably a part of our market, but we have to be careful that we don't, throw a resource commitment sort of that's out of kilter with that 10% return, and whether it's 10% for you, and do your numbers. I'd say, for Endeavour, it's this.
Yeah.
In a market, it's this, because even there you might say, and that pretty much fits in market. I don't know what your level of corporate response might be, but I think that it's worth just.
I'll have a look.
I really think that gives, because the response might well be, well, yeah, but we only get 10% from corporates. We need to do better. So, well, maybe, but it's pretty consistent with market. So we could perhaps chase that rainbow, or we could actually fish where the fish are. Right now we're probably sitting in a pretty consistent market rate. Does that mean we can do better or not? The other thing that I would really emphasise in the corporate partnerships conversation, as you continue to talk about constituency and proposition or vision for change, is money is not the only outcome of a corporate partnership. A very significant outcome will be engaging a broader constituency of people who bring the propensity to make individual collective decisions in places other than the company within which they operate. Individual supporters, community supporters, et al. So I think that's important. I think the other thing that's also worth touching on here in the market dynamic is that there's an increasing number of companies that have already taken a deliberate and strategic approach to their philanthropy by setting up their own foundations or their own giving structures or whatever they might have. So again, for many companies we engage, there will be pre-existing frameworks that we may or may not fit in. So we've got to understand what that looks like as well. So you're beginning to populate a picture of what's actually happening in market against the backdrop that I would contend continues to be not highly considered, let's say. That's the kindest thing I can say. We make assumptions about what we think is happening without really challenging them. So, with the best will of the world, get them to buy a home. Sits on the low end of that spectrum, to be honest. It's probably very well intended, but a sadly disconnected observation of market behaviour. So I think it's sort of getting back without trying to be disrespectful
or condescending. That's right.
All of that. It's pointing out those points of contact, but it's also saying why things won't happen.
And I think that's great. So I'll lead in with that definitely, and then moving into this, because I think as much as this is a wonderful opportunity to talk about the corporate partnerships, I'm freaking out about the conversations that are having that's happening now that Andrew has started, and the realization that I'm a little bit behind those conversations already.
So just before we go into that question, something I would suggest to continue to think about, and once again, I'm sure we've touched on this many times, but taking every opportunity to frame context. So, I think that just as you talk about coming into a corporate partnerships presentation, starting to talk about corporate partnerships, I absolutely understand why that would be the place that you'd naturally go to. And can I say that's probably one of the most fundamental, well-intended errors that folks in fundraising make. They jump straight into the fundraising conversation without any context. And again,
100% was doing it.
So a piece of counsel, perhaps again, just think about it as a constant thing, and no, sort of, we're building into a deeper level of context here because I think it helps paint a picture, downsize it, truncate it, but nonetheless attend to it, because without that meaning,
Yeah, exactly. Without that meeting, this is what happens.
It's highly dangerous. It's highly
Yeah,
dangerous.
yeah,
So I think keep thinking about that. When are you doing this
yeah.
presentation?
Monday, next
Right,
Monday.
Monday
Yeah,
week. Okay.
Monday week.
So
So
if
not
you want to
today.
check back in with me next week.
Yeah,
So this is the 22nd, is it?
I'm presenting on the 15th.
It's Monday next week.
Yeah, sorry, Monday next week.
Okay.
Yeah.
Okay. Even if you want to
End of
send
this
something
week.
through, yeah,
Yeah,
send it, by
yeah,
all means.
that'd be great. I'll be working on it today and tomorrow morning, and then the only day I can't do is Thursday. My daughter's graduating from uni, so I've got that day off. But Wednesday or Friday, I am.
Yeah, look, if
Yeah,
you want to give yourself a bit more time, I've got a
yeah.
bit of time Wednesday afternoon.
Okay,
I've also got some time
okay.
Friday afternoon. So really
All
happy
right.
to
I'll get something through by tomorrow. Yeah,
just because
yeah,
just gives you a chance to sort of get your thinking referenced.
yes, yeah. Okay.
I think in terms of other conversations here, again, I think, well, here I'd be leaning into Kirrily particularly.
Yep.
What's her response to those other conversations?
She didn't even know they were going on.
Okay, what's her response when she knew they were going on?
Yeah, concerned, like just I probably wanted me to be because I was the one that sort of said they're having these conversations, and I know what Dom's been saying to me about wanting to run peer-to-peer events and lunches, and she was like, oh no, that can't happen. So really open to me having meetings with, and I have been really managing up and really connecting with Dom here. I'm meeting with him weekly and really trying to connect. So I think Kimberly was pretty keen for me to keep those conversations going, but also keen for me to get in front of Andrew fairly quickly to be able to do some have some conversations around where I see Endeavour's philanthropy program. Yeah.
So a byproduct, and a very significant byproduct of this work you're doing in the corporate partnerships presentation, is to create that overarching narrative, which is that entry piece into this, which is your stump piece. It's your go-to, almost your elevator speech, but it might be a 5-minute piece or whatever. This is the Endeavour understanding of philanthropy. Anchor this in your shared organisational reality. What probably take a couple of approaches potentially here, Sharon, in no particular order, but just addressing perhaps some of the tactical stuff in terms of wanting to have fun runs and dinners. Just coming right back to practicalities, who's running those? Who's going to actually put them on?
Yeah. I don't know if because he's got a ton of cash. So I don't know whether they're doing external.
It's not the cash. The cash isn't the problem. And in fact, let me just take you back to go forward to the conversation I had with Tom and was it Tracy, the IT person? No.
Kathy.
Kathy. Okay. So no secrets here. Everyone really.
No.
So we're not. I talked through. We were trying to get an understanding. It was really about tech stack and understanding the relevance of tech stack. And I just walked them through the whole journey for Mars Lottery program in my lived experience and a little bit I understand from prior to that, and emphasising some of those key points of learning, which actually ultimately were far less about CRMs and certainly the tech stack, which really fundamentally Endeavour already have because you've got the Jumbo platform, you've got that there anyway. There's nothing new or different about that. But the point that I made in that conversation, the point I make to anyone who cares to listen, that the fundamental point of shift in any lottery program, if you think about this in a marketing construct, you have 4 Ps or 5 Ps or whatever Ps you want to throw into the mix. we talked about this overtly, it is placement.
Yeah.
And always, so placement or distribution. So here again, we get seduced by the idea that it's product or promotion or pricing. All of those are, in any marketing construct, important elements, but they are only important when you have an audience to engage with.
Mm-hmm.
So this is everything but a trade secret, not just for MATA, but for any organisation that's gone down this path, whether it's not lottery or fundraising, as in donations. But MATA's story was simple. We struggled until we built an audience. And when we build an audience over time,
right,
the program lifted exponentially and created a whole different set of problems, which were problems around operating infrastructure. That is to say, there were challenges here were very much around how we created efficacy in running the program, because it grew so large that a manual structure was inefficient and less effective, hence the jumbo operating platform. And we talked through that again, which is very similar to Endeavour. No secrets there. It was moving from a whole lot of manual processes to several automated processes. It was the same, talking about six there. So that shift in audience growth had one modality, face-to-face. You play it back against the market in the past 20 years and probably 25 years now in Australia, and you play that out to the UK particularly. What has transformed the size and scale of market engagement? It is face-to-face fundraising, and as lotteries or fundraising. And that one, again, we can get into a whole conversation about good execution and bad execution. This is all true in market, and we can get distracted by chuggers and all the other stuff that goes around that. But the blunt reality, when you look at the data, and this is where benchmarking data is very, very helpful, it shows an ambiguous growth to those organisations that have invested in this cogently over time and have executed it well and built on those returns. It's a long play. And the data was somewhere between 2008 and 2013 before it really started to wash its face and showed hard and irrefutable evidence of growth. And then it was another 7 years before that operating platform kicked in. So, there's a 12-year journey in itself.
Yeah.
But it was more than that. It was much more than that. And I spent time just explaining what happened to it before that. But my point here is, when we talk about that modality, that's a channel or distribution or placement. So unless you build your audience, then everything else falls off.
It's just, yeah.
So to that end, it makes absolute sense. In fact, I'd absolutely support Dom's focus on data. Here, the question lies in how you get your data. And believe me, I was in an organisation where we tried all manner of things. The only thing that worked with any significant and demonstrable and defendable return was face-to-face.
Is face-to-face.
Now that pool has been built.
Yeah.
Same organisation can go and spend money in above-the-line advertising and be all over the television and be doing a whole, because that pool was built. But we couldn't do that without that pool, because we didn't have scale.
Yeah.
And I'm saying that sort of overtly, but it's such one. I look at it now and go, well, yeah, look, good luck. And I can understand why now the above-the-line advertising takes place, because you've got to keep on building your base
beyond.
But you can only do that when you've got a going concern. If we had done that back in mid-2000s to 2010 plus,
just would have been throwing good money after bad.
It would have killed the program. I can be even more plain than that. Because there was not the viable trading. But that's just commercial. Clarity. There's nothing magic. So, but the question here, and this comes back to this constituency for philanthropic support.
Yeah.
There's data and there's cogent data or connected data. So it's one thing getting names, and here we then carry the risk of assumption that these names will somehow magically transform into doing what you want them to do. And that is the risk. So I see two risks, and in fact, barriers, quite frankly, to running a series of sort of unrelated activities, dinners, fun runs, etc., because they won't translate either in type or scale to shift the momentum that you need to build the program efficacy. So, notwithstanding the other and probably far more fundamental question, you're doing little bits and pieces of stuff that actually doesn't convert into an outcome. It needs to be far more mass generated.
Yeah.
And, if I was putting any time and money, and I've had these conversations several times, I'd do that. The other thing I would do is telemarketing. And as much as, people don't like being wrong. Sure, I get that. And it's harder and harder. Yes, this is true. Absolutely true. It's harder and harder to get people on the phone. So you do that as your second play.
Yeah.
Because there's also that lure into digital, but if you reckon getting people on the phone is difficult, then digital is even harder.
Yeah.
And you've got no response mechanism. The reason that face-to-face works, and it's certainly back in a renaissance now, folks who know this stuff, who I trust implicitly around this, are telling me this quite clearly. But obviously, the right agency and the right execution modality, all those things go with that. The point here is it can shift your scale.
Yeah.
And it's about scale in that distribution question as well.
Yeah.
So, but the other fundamental challenge of those activities is who runs them.
Mm-hmm. Yep. Yeah.
Because I'd be
exactly.
saying, if I were you, I'd be saying, it ain't me, because here's our program. It's built.
Yeah.
And any of this is just a distraction to no end. So here's two other risks that play out. The first is, so then if you set up a series of competing events, that's the point. I'd be absolutely managing this one up, because I used to do this at Mona as well. Saying, hang on a minute, we can't actually take competing activities to market unless we're absolutely aligned on this. We're eroding our base, not adding to it. So, that's a concern. But the biggest question will be, you're actually diverting tangible resources that you may or you may not have into work that really isn't going to give you a demonstrable return.
Yeah.
Yes. I don't know, maybe we're doing this badly, maybe we're doing this wrong, but I can't say in my time, particularly at Mona, where we had a line of sight. We had fun runs, we had International Women's Day fun run, still goes, the Nigel and Miracles 5Ks, that didn't continue for a host of reasons. So there were those sorts of activities. We had everything from balls to dinners. Never, ever, ever saw those translate into lottery return.
No.
Ever.
No.
And it's not that it was a question that was unprosecuted. It just wasn't viable. Viable.
Yeah.
Now, International Women's Day Fun Run, it still continues to be a significant peer-to-peer event. It's a really good program that grows. But herein there's a whole other question. I mean, you might have a bit of crossover with people buying, I imagine, Cars for Cancer tickets and those sorts of things. But even an erosion question here, you actually start to shift. What are you actually achieving by shifting people's focus away from that participation into something different again? There's risks and return here that I'd say, but here again, to build an event like that, which I think last numbers, I reckon I'll be pretty confident saying it probably grows as well over 2 million now. But what do you reckon it would cost?
Yeah, exactly.
Put a number on.
3 million, does it?
To run? No, it would watch its face. So I don't know, but I'm saying very confidently it'll be north of 1.
Wow.
It'll be north of 1.
Yeah,
but that's also on the back of a supporter base.
Yeah.
That is well built now.
Yeah.
Because I remember in 2020, which was the last event that I was associated with, and it was the week before COVID shut down, so it was the 8th of March 2020. I remember reflecting, that year we raised about 1.5 million. But
Wow.
as I was doing the quick sums and thinking, well, notwithstanding event costs, I reckon there's probably another quotient of staff costs. We're probably talking about a 600,000 to 700,000 cost base then.
Yeah, wow.
And I'm probably missing something because they were very crude, back of the mental envelope calculations. And that was off the back of something that had significant investment to get to that level. So my point in all of that, it's the same is true in lottery, is that you have to invest in something to build up that return without any guarantee of that return then translating from the primary process to the secondary process. So because without that, and here I'm talking about the scale question, because the reason that I remember this well, International Mistake Fun Run was actually something that the Brisbane Road Runners Club ran, and Marta and Marta Chicks in Pink were a beneficiary. It probably was about 30K that. But we were gifted that event, so we took it on to keep running it.
Yeah.
But then we had the question of, for a few years, we ran Marta 5Ks for kids, and we ran Marta Rivers 5Ks for kids, and 5Ks never grew. It just always stayed in a particular zone, and we couldn't really find a way to grow it, so we just finished up stopping it.
Yeah, yeah.
And again, the point being, we couldn't scale it up.
You couldn't scale it, yeah.
The thing that I would have to say was as much organic as it was deliberate, and there's elements of both, was we could scale International Mistake Fun Run.
Yeah.
Why? I don't know. I mean, I could point to some reasons why it would, and they might be mostly right, and some may be wrong. But the point being is until that got to the scale, and we had those two very similar events, basically 5K, 10K walks for strong causes. You think, well, okay, your breast cancer is more appealing than kids. Oh, maybe not. Or maybe not.
Yeah.
Why?
Why?
So again, before you even get to realizing the objective that you're looking to accomplish, you're not getting to scale. Dinners?
Yeah.
So I think I'd be, again, my first port of call, if I were in your shoes, would be having these conversations to Kira, to say, look, notwithstanding all of the alignment issues and other distracting factors, the thing that I'd be really concerned about is that this is just a strategy that's destined to fail. And I'd be quite clear about that. Yes, events are a good process or a good activity to pursue in terms of building a constituency. But here the challenge is always to what end that constituency, and again, any preordained end will build this constituency to get people to do X is generally not going to be effective because you're assuming again a behavioural shift that probably won't occur. It can't.
And there's research everywhere that says it. Like every year at an FIA event, you sit there and you listen to them saying that the turnover from peer-to-peer events that go into regular giving is less than 5%. Like it's tiny. So how that's going to be different to convert into lottery tickets, I don't see the.
And I think that's the flaw. And look, I've not had those conversations in any conversation with Dominic Emma. Doesn't come up, but my strong counsel would be. Don't, because I think you're wasting your time. I mean, conversely, my strong counsel has been on a number of occasions, if you want scale, there's really only still one path to get there. It's face-to-face.
Face-to-face, which leads me to the other thing that I wanted to chat to you about, which was the 5,000. So, because we think that, I think we've had this discussion before, that we're not ready for a capital campaign of any sort, like, but we've had a look at the numbers, and we really think that this could be a good intro to talk to people and to get that relationship, that because we do have a lot of mid-level people that we think would find it attractive to be the founding partners of this program, because it'll be a founding. We want 75 people to be the founding members of this, and I was wanting to get your feedback on that. And your thoughts as an intro into maybe in a couple of years, then we will be more attractive to a capital, campaign, possibly, maybe not. But,
I think that pathway makes sense. I have a significant note of caution around the idea of 75 times X equals X.
Yeah.
It's an understandable default in a fundraising context.
Yeah.
I've never seen it work.
Okay.
With one exception.
Okay.
And it's not a single experience. The exception I'm talking about is collective giving.
Right.
Okay. So giving circles. And perhaps an example that's probably close to Brisbane's Women and Change.
All right.
If you're familiar with that at all.
Yeah, I am. Yeah.
Okay. So most of the folk that have been involved in setting that up have probably moved away from that. So that would be interesting, given in terms of what the narrative would be now. But there were 6 people originally: Leslie Ray, Joe Garner, Genevieve Fraser. I'm missing some others. I'll think of them along the way. But all of that was really based off Leslie's master's research in giving circles. She's one of the few SMEs in the country around that, and spent some time in Austin researching some giving circles there. And the reason that works is that peer-to-peer engagement, but also your low entry point. So it's $1,000 a year.
Yeah.
50 women. But the other thing I've reflected on, there aren't many examples of giving circles in market. There's some in arts, and I'm trying to think of his name, James, I think of his name, but this guy in the West who's done some work in this area as well. A couple of things sit under this. A really strong proposition. So if you look at the different giving circles that I'm aware of, there's something that sits in the proposition: bring a group of women together to create a basic level of change in small organisations through that collective giving. In arts, it's shared interest in arts. Elizabeth would have some insight to this, I'm sure.
Yes,
But the other part that I think is really a critical factor is the network of people and connections. So people who know people who can invite people in with a low barrier to entry. Now, $1,000 is not a low barrier to entry, surprisingly enough. We might think it's reasonably acceptable, but when you start to test the propositions, actually, no, it's not enough. So it can work, but I think it really then challenges you to think about what's the model that I would work this on. In a conventional fundraising model, this is why giving gift charts and sequential giving is the fundamental basis, because in fact, in a broad-based marketplace, the typical default will be, let's get X number of people to give the same amount of money. It never happens. Not even doesn't happen sometimes, it just never happens, apart from that giving circle model. That's the only exception in market that I can see.
Okay.
So to that end, a couple of suggestions. I think, yes, think about that. So probably the other examples are your donor clubs, request societies, those sorts of things. But again, the challenge here is, what are people actually buying into? And that may not be the thing that you think you're inviting them to be part of. Being part of this society or this club may not be a sufficient reason to actually move people. It's a good reason because it comes back to those 3 points of philanthropic psychology, the connectedness or relatedness. I am with like-minded people with whom I share a communion and a community of interest, but you've got to get to establish what that community of interest might be in the first instance. So here, the thing that I would really be careful about is your barrier to entry. And my first reaction to that was, I think 5K is too high.
Okay. Yeah.
However, what you could do is 1K a year for 5 years.
Yes, I was just thinking that. Yeah, that's
which shifts your proposition, but it does two things for you. It creates a lower barrier to entry in terms of the immediate transaction, but it also brings people into a regular commitment over time. So here again is why pledge giving is such an important modality, because it shifts the transactional barrier, but in fact lifts the transformational experience, okay, and gives you a chance to commune with people over time. I mean, all fundamental stuff, but it moves away from this idea that people will give because we want them to people will give because we're creating an environment that is about their interest sets and lowers the barrier to entry in terms of why they might participate.
Oh, I like it.
Okay.
And I think I know what the program, I think I know what my pitch will be. So I think I have a really amazing program that's linked to the self-advocacy group, and it's really powerful.
So another thing that I think certainly works in giving circles, and again, if you want to get a far more comprehensive chat reverse around that, talk to Leslie, because she has that embedded in her. I mean, researchers anyway.
Amazing.
Also now, but in fact, the paper is on the QUT e-prints.
Okay.
There's some terrific papers on there, Sharon, including one that was done 25 years ago. That's about servant leadership and fundraising. But
I've got it. I've already got it.
Actually, the other one that's worth actually focusing on that's very recent is Mark Scott's postdoctoral thesis on CEO and chair relationships.
I've seen that.
Yeah. I mean, that's an authoritative piece of work that still bobs in e-prints. So they're all on there. All those papers are there. And again, the executive summaries will give you a good view of them. But the fact is they are there. They are part of a body of knowledge and research that is accessible. It just adds to your case. This isn't just sort of myth and speculation.
That's right. That's right. That's what I want to be able to do, is show evidence-based.
I mean, the other thing that I would draw on, and you've probably got this already at your fingertips, that I wouldn't ignore it, is another QUT research paper, ACPS research paper, is the piece of work that Wendy Scaife, Katie McDonald and Alex Williamson did back in 2013, Who's Asking for What? If you're really looking to get Andrew's attention early, that's a paper that is very clear in talking about board, CEO, fundraisers. I was chatting with Wendy about it a couple of weeks ago, actually, and she said, it's old work now. I said, well, it might be old work, Wendy, but I keep referring to it because the issues I see in market are constant, haven't changed from when you did that work. So if the issues haven't changed, then the work is valid, and most of this stuff doesn't shift over time. Those papers, by the way, many of them, I haven't put Margie's work up yet. I don't know if there's work up there, but certainly on my website. If you want a shortcut, certainly that work, Who's Asking for What, is there.
Oh, good. Okay.
And I can help track anything else. Again, I wouldn't be drowning people in that. Just simply referring to that.
Just referring and just just pulling some things out. That'd be great. Yeah.
So the thing that I'd suggest you do in terms of going down that path, talking about, is if you've got a cohort of people that you think are sort of in your primary circle of interest, two things. I'll be testing their appetite. So do your research around that. I mean, yes, you could do it independently. I wouldn't worry really about doing that. I mean, the risk of doing it yourself is people will tell you what they want you to hear, but you can diffuse that to some extent, to a large extent. But checking in or testing with people the program viability with that cohort of people that you imagine might be your primary supporters. A significant reason that I would see, that going back to what I was earlier making, giving circles work, is peer-to-peer endorsement. So I'm in a giving circle. I say to you, Sharon, hey, I'm signed up with this. I reckon it's really, really cool work, and we do this, and we're able to fund these things. I reckon this would be something you could be interested in. Is it something that you would be interested in? Yeah, could be.
Mm-hmm.
And here again, we come back to that connectedness piece.
Mm-hmm.
And you'd say, yeah, well, if you're up for that, then I'm interested in it. Yeah.
Yeah. Love it.
But you
Okay.
want, so what you're looking to find then is, who are those people that you would use as your advocates to have exactly those conversations at a broader market level?
Yep. Great.
It's a pretty painless proposition, by the way, for board members who are already engaged to jump into as well.
Well, and I like that. That makes sense. The 1,000 for 5 years, very, like, really, surely a board member can, yeah.
Can I suggest you caps it this way? A minimum of 1,000.
A minimum, yeah.
Mm-hmm. Give more if you can, if you're up for it.
Yeah. Okay. Great. Excellent. Okay.
You mentioned training.
Yes. We really,
Because,
yes.
yeah, okay, so
I think it was for twofold. It was for team and for ELT and board.
Yeah.
Because leading into our 75 year, I thought it's a really good conversation. It's a really easy way of saying, hey, we're not doing this because we think you're shit at it. We think it's just a really important year. And I know that, conversations can be, intimidating, or sometimes, I've had conversations with board people that members that sort of go, yeah, just not really sure what to say. So it's sort of, there's a really nice, and we've got new board members in at the moment too. So we've got a couple of new ones that have not really had much experience in fundraising.
Yep.
So it sort of fits. Yeah. Yeah.
So, yeah, I mean, you could get another agency in to do that. The opportunities are, there might be a fit for purpose element around that. Might be a different voice. The risks are that you've got different conversations and organisational knowledge. And again, I'm just being very, very trying to be as objective as I can in saying, why might you go this way? But in really blunt terms, it's the work that I do.
And that's why, no, 100%. So that I wasn't, I was happy just to, if we maybe pop something together simply. I know that they're keen. I know Elizabeth wanted me to present something early next year to the entire board. So it would be.
Yeah. And again, I'm just conscious of not wanting to sort of abuse a position of confidence or trusting. But for context, I've only done 4 or 5 board sessions in the last 3 months. From different angles. The thing that I would always look to is tailoring that to your specific needs. So, for example, chapter and verse in terms of the background, but it's really framed at helping boards understand philanthropy. So going right back to the root of our conversation today, talking about how market works, talking about what they might do from a broad sense of responsibilities, but the drop-ins in all of that, and this is where it can move in different directions, is everything from, what are specific board activities. I did one session with a client where we began to move into what might you do as a board The other element that you can then elaborate is how might you do it. So what might you do is how might you look. Sorry, what might you do? The steps that you would take to identify opportunities, respond to opportunities. But another piece of that work, depending on the time available, is coaching people through how to have those conversations.
Perfect.
What that might look like, what you might say, what you might listen to.
Yes.
And critically here, how to work with the team in the organisation as well. One of the big barriers that I see is often, look, I have these conversations with people that I see these opportunities, but I'm not sure what to do with them. So how do I actually think about engaging Sharon's team in terms of this process? So that's one piece of it. The other side of that coin then comes back to your team. And here, again, similar theme. It's not about saying that we don't think you know what to do. However, we'd really be wanting to be sure that you do what you do really well. Once you move into that domain, you've got to be in.
You've got to be really
best going mode. It's the same approach that I take when working with particularly healthcare organisations around clinician engagement, because it's the approach that you say, look, you can't be a bit half-assed about this. You can't sort of run to your own drumbeat and time, and you've got to be really clear about how you engage with people and what your follow-up mechanisms are, et cetera, et cetera. And really, I'd argue it's the same with board. I see, what do I see from a board perspective? Actually, with the very best of intent, I see a bit of patchiness at times. There's several reasons, I suppose, but I was only thinking about this morning. Rolling to the 8th of December, I was having a chat with one of the folks leading a team in the organisations, even the board of them, were texting maybe a week or two ago, maybe a bit longer, about setting up a session with the team today. Now, the day's come, it's here, and it's probably going to go soon, so we're not doing that session. And there might be a host of good reasons. My point here is there's a risk in setting up an expectation that you don't follow through on. And I get people get busy, but the real danger, I think, and it's probably heightened most of all at board level, is the counter to being overt and effective and engaged is not being complete. Now, there's always forgiveness and understanding around that, particularly this time of year. I get it entirely. But my answer is just be careful, because sometimes if you're not landing, so this is where the team training comes into play to say, guys, this is not a ball you can drop. And if you say you're going to do X and X doesn't materialize, it's perfectly okay to come back and say, look, we were talking about doing this then. It's not going to happen for these reasons. What's an alternative time for us to do that? The momentum continues. Silence is never a very good option here. So it's an example, but it's that sort of discipline that I find that often from a fundraising perspective, it's about jumping in and having the fundraising conversation first. I am immersed in my busyness. I'm kind of a bit lost in all of that. Oh, that's right. I've forgotten that I'd said I was going to do X. In some cases, it matters less than others. In this case, I would say it matters a lot.
A lot. And I know the team keep holding me accountable, because I did say we we're going to do training and we haven't done any. So I know that that's one thing. And then I know that Elizabeth is very open to, in the new year, having a session. So I think it would be perfect, especially being a 75 year. It's a really easy segue to get it through. So I think it's important that I really actually commit to something and schedule it in.
So here, a couple of things. I think that thinking about what would work best for the board. So the approach I take is really with any client, say, what are your parameters?
Yeah.
And how do I fit something into your parameters rather than trying to fit into mine? Now, that said, then we can start to bend and shape what that looks like from a execution. I'm happy to send you an outline or talk through that. In fact, just going to quickly bring up something
that would be
here
great. Yeah.
of some examples, but maybe this can be a conversation either pre or post Christmas, depending on the time you've got. But I can walk you through approaches to both. I'd say board and exec training here, and again thinking about what that looks like. Or maybe you want discrete offerings, one for board, one for exec. It depends. There's a value in doing something collectively, because hearing the same message and that continual message, but it depends on the circumstances.
Okay.
But that said, I think the other, and the team training similarly, how that's configured. My sense with your team would be principles and practice. So that's talking about what principles do you really need to embed your understanding, and how do we actually practice this almost in, well, not almost, in role plays and lived experience. And then I'd be building in a check-in time, a tail of work to actually work with people and saying, how's this working for you? What is and what isn't, etc.
And that would be more one-on-one.
Correct. Yep. It may be, though, that there could be some value in bringing Dom's team into the initial process as well. Hey, if we're going to do this, let's all be on the same page.
Yeah.
So whatever happens with the slew of activities that do or don't emerge, they're based off the Endeavour way. And so here, one thing that I would probably then, okay, I'll take the word. One thing I would suggest you consider is saying this is about building the Endeavour way of philanthropic engagement.
Yeah, which is what we've wanted. Yeah.
Hold that ground.
Yeah.
And it's not about ownership here. It's about saying, if we are disparate in the way in which we engage market, we'll always be less than we could be. So the important element here is that we have to be consistent around what we understand to be so and how we execute this. Because that's how market will see us.
Yeah, that's really good.
So critical parameters for board: how much time have they got? What are they willing to spend? Is there a comfort around board and executive doing this together? What are the key themes of interest that they might have? What are the areas that, particularly if you've got an advocate such as Elizabeth, she's looking to highlight? So here, for me, the key themes that I touch on pretty typically as a broad base: framing philanthropy and fundraising, that conversation we had today, market perspectives. I'll send you a PDF. Cultural philanthropy, fundraising success factors, leadership roles and responsibilities. So what I'll shoot through, I did a session a few weeks ago for Giving Architects over in Auckland, which would be a pretty typical baseline presentation in terms of content. There's different directions that this can be taken, but it's quite representative of the core approach I've taken in other similar offerings in recent months, and over a longer period of time as well, for that matter. So I'll shoot that through to you.
Okay, awesome. Thank you. Because I'll get on to that as well, because I know that Elizabeth's really keen to have that presentation, so I don't want to,
definitely strike while the iron. So I'll put some frameworks together in terms of
okay, thank you.
costings and so forth as well, to
Thank
give you
you.
an
That'd be
idea
great.
around
Yeah,
that
that'd be good.
for both board and team and some approaches. So
Yeah.
that's
No,
fine.
that sounds good. You're presenting at the FIA, aren't you? You
I
said
am.
this year. Very good. Because
That'll
I
be
just got the full program just came through to me on Friday. So I've just picked it up. I saw that Camilla Marshall my old boss here is presenting next year. So
Is she?
I thought,
Right.
yeah, she's with Clancy.
Oh, yeah.
Clancy Firigal. I don't know
Yeah.
who, but from MARTA as well.
Clance is with
So
Marta. Yeah, she's been there a few years now. She was
right.
at MS before that. She wasn't there in my time, but I do know her, and actually
yeah.
sort of got to know Clancy a bit better in the last little while. She's a good kid, actually, a good kid. I mean, she'd be in her 30s, but this says
that's what happens, isn't it? But we are holding and look, it's normally a really busy time, and so it might not be suitable. But we are doing what we did in Sydney last year, where we're holding a conversations and connections night on the Wednesday, the 25th. So it's on the Wednesday night of the first day of the conference after the master classes. But Andrew Chesterman's coming down, which is wonderful.
Yep.
But I know everyone's got it's normally a great time for you to have dinners and catch up with people, but we'll send you through an invite. And because it just maybe something. But again, it's just that, it's similar to what we do at the Pathways evening at the final event, but we've got some great people already responded, which it's lovely. It seems that this is we've had a number of them now, so people are starting to understand them and get familiar with them, so the response rates getting more and more, we're noticing now too, which is wonderful. And more engagement from an internal perspective. So the ELT board are all sharing them and coming with suggestions. So so it's good.
Excellent. No, that's good. Just takes me back to another thought bubble here that I was going to raise early in our conversation today when we were talking about Andrew and the perceptions. Appreciating there's a lot coming at him in this early time. Is there any value, perhaps earlier in the new year and ahead of this event you just talked about in February, to set up an opportunity for a conversation? Just to say, hey, look, here's a guy who's been working with us for a number of years and knows us well from outside in. Gild whatever little you want to in terms of positioning, but it's a case of saying,
I think it's
just
a great
be worth your
idea.
while having a conversation, just be the two of you. You don't have to have me in it or anyone else in it for that matter. No. But it's a good opportunity just to ask questions and get a sense of market. It's again.
I love it.
Whatever.
No, with it, especially with all the activity that I want to do, and if we do this piece with the board, I think it'd be nice for you to have met him before you're going, because you know Elizabeth very well.
Yeah, well,
so
certainly well enough, but I think the positioning that I always recommend here is from that executive and governance perspective.
Yes.
With that philanthropy and fundraising sector base as opposed to the other way around. It just puts a context around a peer conversation rather than another
that's right.
practice conversation.
That's right.
Just thinking about the ways in which that script changes. I think the other two people that I'd really be just thinking about how to engage them further, maybe it's also entirely for another conversation with Kiralee, but Kiralee and Emma, I think, Having them on the same page along with Andrew comes back to something we've talked about before in terms of folks around the executive table having that alignment. I get the desire to drive lottery, and I would say, do that at whatever pace you can. In many respects, the more the better, but be careful. My counsel is be careful what you drive over the top of to get there, and be careful what sort of diversionary paths you go down. And I guess, again, recognizing that one or even several conversations, particularly when there's some time between them, will not be enough to anchor a core set of ideas. So I think from your perspective, this is not anything other than just, I think, good organisational engagement. Continue to perpetuate those conversations and those points of understanding with key people. I wouldn't worry so much about Anthony. He reports to Emma anyway. I think that it'd be good to try and shift that, but I don't know what that propensity is. It might be a bit hardwired, I don't know. But that's not really where the action is.
No.
I think
Okay. Yeah, no, I will. I'll get onto that actually straight away. Because I think all of this is really, really important. And as I said, there's so much movement, and I think with Andrew being new and really wanting to absorb everything in, he's like a sponge. I think he'd be really open to it. And I think it's a really key thing. Yeah.
A challenge that I think it's a huge opportunity, but with all opportunity, there's challenge or risk alongside of it as well. You have a board chair who is really informed and engaged in this sector.
Yeah.
He's a very good person, but has clearly and obviously a strong governance background. I mean, it's not always common to have someone with those different insights and capability sets, but also, and that's a huge opportunity, but the risk is expectation.
Yes.
So my sense is in the very nice way that Elizabeth engages, is that there's a risk if you're not up to it, she'll see through you.
Yeah.
Now that's not, it's not going to be pin to the wall type of accountability, but I think that there's an opportunity really to impress and engage, but there's also an opportunity to kind of be found out at whatever level. And I say that again from the perspective that I look at from a board perspective. I know that I do this, and I don't make any bones of it. But people are kind of going, there's not a high level of leaning into these sorts of areas. Kind of going, oh, really?
Yeah,
it's suboptimal. And not that I see that a lot, but it
but when you
stands
see
out
it,
when
you
it
can
does.
see it.
So,
okay.
I just think it's a tremendous opportunity.
Absolutely. Yeah.
But it's one that needs to be managed well.
Yes. Yep. Okay. I hear you. That sounds good.
Okay.
Okay. All right. Well, thank you. I think that's enough. Because I'll get cracking on all of this that we've spoken about, and then make sure that I've got everything, and then I'll try and get something, aim to have something to you tomorrow afternoon, and then if we can touch base again either Wednesday or Friday, just even for a short time, that would be wonderful.
Both afternoons
or even good. Okay. Yeah.
From my perspective.
Yeah.
That's fine.
Thank you.
You mentioned your daughter's graduation. Is that what's that from?
Thursday. She's double degree in business and psychology. So
Okay.
at QUT.
QUT.
Yeah.
Okay.
So
Okay.
yeah.
Excellent.
So
Is
yes,
that
she's
4 years or 3 years?
4 years.
4 years.
4 years.
Okay. Yeah.
But she's I don't know, she's funny little thing. She said she's actually disappointed, and she's finished with distinctions, bless her, but but the pathways from this degree haven't been as much as what she thought they would be when she entered into it. So she's now doing a heap of she's done a lot of applying because she wants to do her master's in something. So she's still now waiting to see what she moves into.
I was going to ask, what is she looking to do?
Well, she'd like to be a clinical psychologist.
Going down the clinical
So
path. Yep.
yeah, so but she noticed that a lot of people that do this degree actually go down the research, a lot more research, but she doesn't really have the interest in the research. She really wanted to do more clinical. So she's been a little bit disappointed in her course choice, but hopefully that'll be fine. She'll be able to still move into it. Yeah, yeah.
So, I would have thought a double degree business and psych is a huge pathway. Sorry, it offers a very diverse range of options depending on where you want to go.
Yes.
So that's why I asked about the direction, because that clinical and or research perspective, but into the broader business world, whether it's down an HR path, or frankly, even the business that mum's in would be one that fundamentally is anchored. If I was looking to recommend folks getting into a fundraising role, I'd say actually business and psych would be ideal.
Amazing. Yeah.
Because it's translating the knowledge of people into and behaviour into business practices.
True. It's funny you say that. Yeah.
It's all of that and more. Our daughter started doing psych when she started at uni and then transitioned into HR. I think the stats I don't think stats absolutely stuck her up. But she went down the HR path and she's now.
That's what she's doing. Yeah.
Took her a long time to get through it. I think it was one of the world's longest degrees, but yeah, she's when Kate graduated, it was back in 2011 or 12 or something, I think.
Oh, right. Yeah.
I was asking Leanne.
Bless.
Yeah, 13 perhaps, maybe 13. Anyway, she's carved a really successful career in HR.
Good on her.
With Hayes since then. So.
Right. Yeah.
Which is my curiosity because she has just always had that particular bent, but that was where her side interest took her.
So I'll be interested to see where Indy where she goes. She's going overseas. Like she graduates this Thursday, then she's going overseas to meet her partner who's doing he's in St Andrews doing a year in his honours in international business. So so she's going over to meet. They're having a bit of a holiday together, and then she'll come back and she'll see what she gets into. So we'll see. But yeah, she's a little passionate little cookie, so she'll be right. Yeah.
Yeah, well, always one of those things as parents you sort of watch on and you kind of see them emerge and they take their own paths. And but anyway, it's just always curious what other people are doing and where they're emerging. And
she's good. No, she's
excellent.
Good.
Well, enjoy the graduation.
Well, thank you. Yes,
we'll speak
to you. Afterwards. Thanks again, Nigel. Really appreciate time today. Thank you.
No worries.
Bye.
See ya.
Bye.
Bye.